Good afternoon, everyone. My name is Seema Menon, and I represent IMA India, which is the country's premier business information services company, which offers high quality and comprehensive CXO peer networks with over 2,500 multinationals, domestic, large and mid-sized companies as its clients. And I'm absolutely delighted to welcome you all to today's interaction. We are very excited about today's webinar, and we're doing this in conjunction with Vienna, which is India's leading trade credit infrastructure services company. This specific interaction that we've curated today will discuss and deliberate with finance leaders on how integrated and optimized finance and procurement strategies can help in creating a truly resilient supply chain. And like always, our webinars are interactive. We would request you to share in your comments, your questions, etc., so that we all can build on it and take away insights that are useful for us in our individual capacity as finance leaders and also for our organization. So with that, we'll quickly get started. I'll share a couple of lines around setting the context. Recent interlocking events from geopolitical to structural causes have exposed the critical vulnerability of global supply chains. Finance and procurement functions are no longer siloed cost centers, and we're seeing that as a reality with every interaction that I have with finance leaders. They talk about how they work very collaboratively to devise the best set of strategies for their supply chain. CFOs also now recognize that optimizing working capital, mitigating supplier risk, and enabling agile procurement are fundamental to safeguarding operations, ensuring continuity, and driving sustainable growth. So we'll discuss more of that in the conversation today. Just a little housekeeping announcement before we get started. If you have any questions during the interaction, please type them to the Q&A window, and I will bring them up during the Q&A schedule at the end of it. We'll also run a few polls during the session, and here's where you can key in the responses. You see that slide in front of you? Right. So before we get into the interaction, I wanted to quickly introduce our panel to you. We put together a very interesting panel today, and we have with us Narasimhan Srinivasan Gopalan, Director, CI and Business, Schneider Electric. We have Yashpal Jain, CFO, Sandhar Technologies, and CK Venkatesh, who's the EVP Supply Chain Finance at Vienna. Thank you all for joining us. And like I said, we will run a few polls, and this is basically to get in your inputs as senior finance leaders on the current context of supply chains within your organizations. So we have the first poll question that's coming up. Okay, so this says, how do you finance and procurement work together in your organization? So you have an option to select the choices. Okay, this is very interesting. Sure. So we'll run these polls for about 40 seconds, and that should give you enough of time to key in your responses. Okay, so here are the results of our first poll. So about 59% say that they are fully integrated with shared systems and goals. About 32% say that some collaboration, but still mostly separate. And about 9% say that there is minimal interaction, work independently, which I think, from a majority standpoint is a very, very minuscule percentage. So moving on, I'd like to first get some insights from Narasimhan. Narasimhan, recent disruptions have forced finance and procurement to work closer. Was this just disruption, or was it always like that the finance and the procurement teams work together? And from your experience, what has been the single biggest catalyst driving this collaboration in your organization? So we'll get Narasimhan's inputs and then go to Yashpal, and Venki can quickly comment on what he's seeing amongst his client organizations.
Sure. Good afternoon, everybody, and thanks, Seema, for having me here. It's a pleasure to interact with you always, and thanks again for having me. Right. So this is a very interesting one, Seema. I mean, in terms of what drives finance and procurement together, right? So I
Yeah.
think there's everything, every single reason why they should be working together. It's been historically, may not be so very historically, but there are quite a lot of changes that have come up now, right? So in terms of
Sure.
certain variables which had not been there earlier, which
Hmm.
now I think finance plays a very, very important role in procurement and vice versa. Right. So procurement obviously nowadays is not a mere cost center, right? So it drives
Hmm.
lots of value to the organization. There have been multiple changes, right? So first of all, I would say one is definitely the geopolitical risk that we have, right? So that we are facing, right? It can be global procurement and local procurement as well,
Sure.
right? In terms of what's happening today, in terms of the compliance that we'll have to face, like for example, just one recent aspect that's being emphasized upon is the Make in India option, right? So
Hmm.
obviously, there's going to be lots of localization that's going to happen within the country, right? But we actually don't know whether it's going to be really productive in the short term. Obviously, in the long term, yes. I mean, once you master the trade, I think you will be at par with everybody else. But till then, you will have a cycle of learning in which obviously initially your costs are going to go up, right? So how are you going to account for this cost? So procurement, of course, as well, there is a parameter. There is a parameter of productivity that's defined in terms of cost, right? So would they be able to meet it?
Hmm.
Obviously, no, again, in the short term, but that's again a thing which purchase and the procurement and the finance need to work together to understand, saying that, okay, there is an element of cost variance that's going to come up because of all these geopolitical tensions that's happening, right?
Hmm.
There are going to be an implication in terms of the duty structure, maybe, right, in the
Hmm.
cost of localization. So, I mean, you just need to accommodate all of that, right? How you're
Yeah.
going to do
Yeah.
it in your P&L is something that you will have to see. I mean, and it's not more generic with my organization. I guess globally or across all the organizations, I think this is the fundamental challenge.
Hmm.
Right. I was just listening to a colleague of mine who is globally. I'll just tell you what. There was an order that was placed, right, and the
Hmm.
shipment moved from from a country like Vietnam to the US, and this was like a couple of months back, and by the time it landed, the costs had gone up, right? So
Hmm. Yeah.
your contract with the customer is fixed, right? But you don't know what you're going to do, how you're going to be absorbing that cost in the P&L, right? So that's a very fundamental, sort of thing that's coming up. So your
Hmm.
supply chains are changing. I think that's fundamental. Secondly, in terms of ESG compliances, etc., again, there are lots of compliances that have come in,
Hmm.
right? So how do you accommodate that in the P&L, right? So how do you ensure that your cost is still L1, but you tend to sort of, work very, very closely. So there are quite a lot of things, right? Those one, as I said, I mean, one is supply chain, ESG, right? And more transparency in terms of costs. I think
Hmm.
those are the three main things which actually make finance and procurement work together. As I said, I mean,
Right.
in certain organizations, in fact, in most of the organizations, I would say, I mean, everywhere, I think across the audience, people would tend to agree that in terms of capex purchases, obviously there's a finance guy who's also involved in taking procurement
Hmm.
decisions. So it's not a typically it's not at the lowest cost, I think, but it's at the best cost, which adds value to the organization. I would put it that way, and that's
Sure.
how finance will need to understand that and work very, very closely with procurement. Yeah.
Absolutely. Great points, Narasimhan. Over to you, Yashpal. You're on mute, I think. Yeah.
Yeah.
Okay.
So good afternoon to all, and thanks for joining the webinar. So taking forward from Narasimhan left, because these days, one factor is the geopolitical instability which is prevailing across the world and even in within the country also. There has been a large scale of disruptions also, which has
Yeah.
forced the organizations, I would say in some cases, it has been a voluntary adoption of integrating the procurement with the finance. Some cases have been a forced integration.
Yeah.
But yes, there are certain reasons. One of them, as Narsimha has pointed out, is a regulatory one or the compliance one. Taking it forward, these days we are seeing that a lot of changes are coming up in the various legislations also.
Hmm.
So there has to be a kind of element of, like, I would say, a direct taxation, indirect taxation. That content is coming out. It is very essential that the finance or the taxation teams are also aligned with the procurement team and both are understandable to each other that what is required, because ultimately there are tier 1, tier 2, tier 3 suppliers. So you need to drill down to each and every level. It's not just that you are procuring from one level and other levels can be left over. So it's a entire chain of supplies, entire chain of supply. Second
Right.
aspect what comes into picture is the financial portion also. So
Mm.
in the case like if you are procuring, like I give you a practical example of my industry, we operate into auto component industry where the margins are very thin and supply chain plays a very dominant role in terms of ensuring a supplies to the customer as well as getting the materials procured. So in this scenario, it is very difficult for us to pressurize a supplier to reduce the prices. At the same
Mm.
time, it's impossible to get the price hike from the customer. For
Mm.
customer, we are supplier, and for us, our supplier is the
Yeah.
supplier. So this way the chain goes on. So
Right.
another thing is that there is a financial engineering always involved. So the finance team sits with the procurement team, understands what is the requirement, what is the lead time for requirement. In many of the cases, it happens that the cost of giving the credit to the supplier is much higher versus
Mm.
what the finance cost we are incurring by directly funding to the supplier or getting the discounting done by us instead of going for a discounting, I would say, outside agency. So
Sure.
this is also another impact which helps us to save a cost in terms of procurement. Third portion is the like to maintain a supply chain without any disruptions. So what happens? There is a lead time, then there happens to be a situation where procurement works in a different manner. But like in these days, what is happening is that the CFOs are leading many other business activities also. In
Mm.
that scenario, you are aware that what is the cost structure and how it can be mitigated, looking to the global challenges or within the country itself.
Right.
Giving to my example, for last 3.5 years, I have handled both the procurement as a finance function.
Mm.
So from the database, from the supplier codes to the material master, everything was integrated so
Mm.
that there is no duplication of the work, no duplication of the efforts also. Both
Right.
teams work together. While the procurement is more focused in developing the new contacts, new markets, rest of the portion is taken by the finance team in terms of supporting them.
Sure.
So this is how there are many factors which are forced, but these are just I
Yeah.
would say
Good enough.
glimpse of the same. Yeah.
Good, good. Venki, you engage with CFOs and procurement leaders by virtue of your role at Vienna.
Right.
What is it that you're seeing? Are you seeing a greater integration, or like the 9% that responded saying that we're still working in silos?
So
What is the
let me give you a context. So I
Sure.
think during COVID and post-COVID, I mean, we have seen supply chain being disrupted so much that
Right.
corporates have started rethinking about their strategy over supply chain
Mm.
itself.
Mm.
Having said that, I think what I'm seeing when I'm talking to CFOs is that a lot of these investments now, not
Mm.
just being capex, is
Mm.
also kind of moving to working capital solutions, and one of them being obviously being supply chains.
Right.
When I'm saying this, what I mean is corporates are investing in providing liquidity in the supply chain to
Mm.
ensure that their suppliers and their buyers or sellers are well controlled, because obviously they are ultimately the final, you know, consumers in that sense, because
Mm.
they're the ones who are buying or selling, right, to make
Yeah.
the product and etc. All of that. Now, I think what's also happening, I'm seeing when I'm talking to a lot of CFOs, is that they're not looking at supply chain as an ROI, but
Mm.
actually it's looking at creating a stability in the supply chain and also kind of looking at some kind of a cost reduction mechanism, and also tying up the entire ecosystem, kind of ring fencing it so that they are well
Yeah.
protected in any kind of exigencies.
Right.
Having said that, there are so many tools in the in the country today to provide which we can leverage for supply chain, like dynamic discounting, a PBD payable solution where you obviously the corporate could kind of extract some discounts and from the supply and ensure payments are made timely and all of that.
Right.
Now, one important thing we also realized is that one question which you really put up was very interesting was what we're seeing is the integration of the procurement, the finance, the commercial, etc., into one single basket, so that they're able to actually work together closely and see, benefits of the overall
Yeah.
working capital cycle. So
Right.
we actually running currently a project with one of the large German MNCs where this is exactly what we're doing. We're creating a single dashboard for the corporate so that the procurement, the commercial set are all on one platform to ensure that the working capital is maximized and used in a more efficient manner. And that's actually work in progress. And this is one of the points which I was interesting to kind of comment about. And I'm
Sure.
seeing a lot of requirements coming up there because companies have also started realizing it's just not one side of the game. It's the entire, ecosystem needs to be kind of protected for themselves. so that they are able to generate better margins and are also able to kind of operate at what do you call, I would say, margins which is healthy for both the supplier on one side as well as the dealer, the distributor or the channel on the other side. Now,
Right.
the last is what off late, what I'm really seeing is that a lot of impetus is being given by even now by financial institutions by providing very, very different products for, under supply chain itself. So that's one good positive, thing which is happening. And COVID has actually taught us a lot of lessons in trying to be resilient. And I think
Right.
in terms of overall supply chain resilience, I think we're still yet to get that. By a lot of corporates have kind of really, I would say mastered it. There are still long, many roads to cover for many corporates to ensure that, they're all on the same line, same path.
Very interesting, because this actually segues very appropriately into our, next poll question, which is around what is the biggest hurdle in making your supply chains more resilient. So while we all know, the external factors, the geopolitical landscape and those challenges that we are sort of grappling with, but internally, we'd be very keen to know what your organizations believe are some of the biggest hurdles or challenges that are in the way to making your supply chains more resilient. Okay, some very, very interesting insights that are coming through. I'll end the poll now and just share the results. So I think, Venki, this alludes to a lot that you spoke about, really, around poor visibility, tight budgets, and short-term focus. Again, hard to track and assess supplier risks. This being one of the aspects that you briefly touched upon.
Yeah.
So I think it alludes to a lot that you had sort of mentioned as some of the challenges, which is also why it is more than important now to sort of integrate finance and procurement, to integrate and work very closely with each other. Okay, so moving on, balancing liquidity protection with investments in supply chain resilience, for example, like diversification or inventory buffers, is tricky. So what frameworks or metrics do you use to evaluate these trade-offs and justify those investments? Nasiman, we'll move on to you and then get quick inputs from our other panelists as well.
Sure. I mean, great inputs, Venki and Ishpal. Yeah, I mean, this is a very good question, right? So how do you trade off between what is short term and what is long term, right? As I was just talking about, right? There are two things, right? One is how we're going to be driving cost in the short term, and then of course how we're going to be managing the overall profitability or overall P&L for the longer period of time, right? So there are a couple of major aspects to it. Right. So one, as I said, I mean, when in terms of procurement, right? So obviously the procurement team has a mandate internally, right, to get the best possible price at the lowest cost, right?
Yeah.
So now what is the best possible product is very, very relative, right? So if there is certain value that's being delivered by the particular product, right? I mean, typically because it's all going to be the guy's productivity is there and he's going to be assessed, he's going to be measured, his performance is going to be assessed based on how low the cost is going to be driving on is fundamental. I think that's where finance plays a very, very important role, right? Where he actually partners with the procurement guy and says, look at the total cost of ownership, right? Don't look at, just maybe if you've got three vendors, let's say, I mean, typically the process is to invite three quotes and see which is L1 and then say, okay, good, you are an L1 and do it, right? So, I mean, that's just one way of doing it, right? The finance guy could add actually value, especially, I mean, you can't be doing it for every case. I think the larger the case, I think that's where finance guy will have to get involved and say, look, by procuring this, if it means the total cost of ownership, let's say over a period of 10 years, this asset is going to be much more productive for you and you're going to be recovering it in the long term, it's fine. I mean, short term, it's okay. I mean, you can still do it. The vendor could not be necessarily L1, but let's give that particular vendor a premium of, let's say, 5 or 8% or whatever, just to ensure that in the long run, the organization is benefited, right? So that's one fundamental thing. Second, as I was saying, is how in terms of ESG compliances, right? Of late, there have been lots of ESG compliances which is common, right? So, and the ESG policy is evolving, right? Today, it's in a nascent state compared to other nations, but eventually we're getting there, right? So, are you going to be buying products, let's say, even typically at the lowest cost, and which is sort of going to get obsolete, let's say, in the next 2 or 3 years, right? Again, so that's a big question mark with so much uncertainties. So, how are you going to be balancing off the long-term vision of the organization along with this is fundamental, right? So obviously, I mean, he will have to play that game of hedges. How you're going to be stocking without hurting the supply chain, like what Venki was saying, cash flow is super, super important, right? So most of the vendors that you generally tend to buy, right, like what Ishpal was saying as well, is that they happen to be MSME, right? So which means you can't do anything. You've got a fixed time frame in which you have to pay the vendor. You don't have a choice, but you aren't in front of your customer.
Right.
So how are you going to be managing that cash flow, right? Fundamentally. So if you're going to be buying in more stock, which means more inventory is lying in your warehouse, your cash flow is gone, right? And you're going to collect the payments from the customer, which he never understands in your own sweet time, right? So he's not going to understand your complications that you have to manage, right? So that's where I think solutions like these, in terms of how you're going to be vendor financing, how you're going to be supporting the vendor, right? So it is an ecosystem, right? So how you're going to be enabling your vendor is super important to see how you're going to be meeting that customer delivery. So that's why the longer term vision of the organization in delivering overall productivity to our end customer should be the starting point, and you work backwards, right? To ensure that the entire supply chain system and the vendors evolve along with you. How we are going to be setting up that ecosystem is super critical, right? And that's not going to be done by the guys in the front trunk. I think it'll have to be a CXO decision to see how we're going to be doing this in the long term and how we're going to structure the organization and the KPIs. It's going to be a trade-off between the long term and the short term. How are you going to be establishing that and rewarding people for establishing that KPI? Just not setting up those KPIs, but how internally the organization is structured to rewarding those KPIs is super important. I think that's one major thing which we've done. I think that's something which we have implemented pretty successfully internally within our organization.
Right. Very, very interesting point, Narasimhan, because, the poll also showed up saying that there is too much of focus on the short term without too much value accorded to the long term being one of the challenges. Yashpal, we'd love to hear what you have to say.
Yeah, sure. So taking forward from where Narasimhan has left, I mean, creating long-term value with the suppliers is very important these days. We can avoid 1 or 2 transactions. It's not a matter that, I mean, we are just simply going with a thumb rule of L1 or L2. It depends what is the worth of the supplier, how capable he is, how competent, and can he going to support us for a long period of time, because it's a complete ecosystem. If your supplier fails, obviously you are going to fail, and your ultimate customer is also going to fail in terms of disruptions. So while one thing is that, like, the quality of the product, the value of the product that the supplier can supply, but at the same time, when what finance team plays is that now they have a solution, whether the external solution or internal solution, like Venkatesh has told, how they can mitigate the financial issues of a supplier in terms of his supplies. Also, we are helping our suppliers to further go with their suppliers in terms of supply chain also disruptions.
Sure.
How to avoid them, because might be the ultimate third level tier 3 is facing the liquidity problem. So we are extending that help even to that level also, so that they don't face it. So thing is that both the teams have to work with a pragmatic mind, with a forward looking mind, see what are the various solutions, because cutting down the price is a very traditional method.
Absolutely.
In these days, in this tough competition, it is not possible to cut down the prices across. The main thing is that what are the alternate solutions available? How do we explore them? How do we fit them into the system? How do we apply them into the system? That is where all the people sit together, they brainstorm, and breaking the boundaries of the functions of the department, they work together that how we can make the supplier financially viable, operationally viable. At the same time, we are also financially and operationally viable to serve our customers and ultimately the final customers. So this is my take.
Very, very interesting. Venki, the poll question sort of threw up some 2 very pertinent challenges amongst the others, but 2 of them that was quite significant was, one is tight budgets and a short-term focus by the company. And secondly, I think the most important one was hard to track and assess supplier risks. So what has been your experience when you engage with some of these companies? You're on mute, Venki.
Thanks, Seema, and thanks, Narasimhan and Yashpal on your follow-up this one. So what I see really is today corporates are wanting to ensure that the vendors of the distribution network they deal with are pretty clean. So there are various today uh, ways to integrate with third-party databases, maybe legal databases, maybe financial databases, to ensure that to an extent, you're able to kind of read the standing of the vendor, etc., in terms of financially. And there are also models today where just as it's not a marketing kind of this one, but today we work with about many large corporates today where we are able to provide them an early warning system to our own companies, where we are able to give triangulate a lot of data, which is both internal, external, and give them a kind of a health score on each of these vendors they are kind of trying to work with, and kind of give them a sense as to how this vendor is doing, or this is working. So there are very many models in the market today to kind of predict vendor behavior or distribution behavior based on DSO, DPO, all of that. So that's one thing which is really being adapted by many corporates today, and many of them have already adopted it, and there are still many going that route because they obviously realize that investment in that is very critical to ensure long-term stability of the entire supply chain and the business itself.
Right.
So that's what I would kind of really look at. And last, I would really like kind of put in is while what corporates are doing currently is also getting into the tier 2, tier 3 supply chain, because like Mr. Espalji did mention that, not just procuring or supplying to the tier 1, but also looking at the tier 2, tier 3, which is a little more critical than the tier 1, because tier 1, more or less the repo, the vintage, etc., is established. But tier 2, tier 3 is where the corporate does not have a line of sight. And I think that's where these kind of, systems help you to kind of, get to the health check on these second tier 2 and tier 3 suppliers or distribution network.
Sure. Interesting. I think that also comes to a point called as supply chain finance. And, you're all leaders in manufacturing, right? So you all know what that means. But what I want to query our audience today is specifically around how important is supply chain finance in your organization's whole resilience strategy. So let's see what they're saying. The third poll question is up. Right. Very interesting inputs. Okay, I think the majority really feel that it's a core enabler of cash flow and risk mitigation. About 21% say important, but not fully embedded in the strategy. And 21% said considered mostly as a cost-saving lever. So very quick feedback from all three of you around what you believe this would be. We'll go with Narasimhan first, and then Yashpal and Venki.
Yeah, I mean, I think the polls reveal pretty interesting results. I think I tend to agree, right? So what it's just said, I think I'm just talking about it, right? So I think fundamentally, I think cash flow is the most important thing, I think, for any organization. I think that's like the lifeline, I would say, for organization, right? And obviously, that's why I think both from the customer perspective and the vendor perspective, I think you just need to balance it out, as I was saying. I mean, I tend to agree with the poll. Yeah.
Right. Yashpalji?
Yeah, I do agree with the poll because supply chain finances is very critical, I would say, or very important one, which no organization can overlook. And especially in the case tier 2, tier 3 suppliers, they don't have access to the credit facilities. They are unrated suppliers. In that case, it becomes very a lifeline to them and very critical for the organization to ensure the payments to them, also to ensure liquidity to them. And also they can also fund to their suppliers, and they can, I mean, keep on contributing to the entire supply chain. So it's very critical and very important, I would say.
Absolutely. Venki?
Yeah, so absolutely agree with the views of our panelists and as well as the audience who have kind of opinion on this. What we're also seeing is right now is that there has been a shift from the traditional supply chain, which is a normal,
Mm,
financing, vendor financing, all those products to the tier one, right? What we're also seeing right now is corporates are more and more engaging to see, and even financial institutions are engaging to see whether we can provide the same kind of financing to a tier two, tier three through a controlled, environment in terms of
right,
providing the entire, financing, and which is
mm,
where some of these tools I mentioned will kind of help. Okay.
right.
Apart from that, what I'm also seeing right now is a lot of new products like tokenization, smart contracts,
Mm, mm,
and as latest as the trade receivable securitization, more of a private credit, which is also
mm,
coming into play. So these will actually change the entire dynamics of how we are doing supply chain in the next couple of years. Because one, while there are regulated, institutions which are providing supply chain, and there is
mm,
also now private credit coming into the market to try and ensure that they're capturing the entire, ecosystem. I mean, typically in a traditional supply chain, what happens is you're generally covering 30-40% of the entire overall, this one ecosystem, right? But with
sure.
these kind of products coming in, I think even corporates are realizing that we need to cover the entire supply chain, and they're going all out to do that, and which is actually helping them optimize the overall working capital across the organization.
Right.
That's
Interesting.
this one.
Right. Let's also very quickly understand from our audience in terms of what would help them use supply chain finance as a tool for resilience. So faster counterparty onboarding processes, better integration with ERP or financial systems, more competitive and flexible financing options, inclusion of a wider base of SME counterparties. Okay, so about 52% say more competitive and flexible financing options. About 35% say better integration with ERP and financial systems. And 9% say inclusion of a wider base of SME counterparties, and 4% say faster counterparty onboarding process. So, Venki, I did see you smile. I mean, I I understand that, some of these things are exactly what you see
Yeah.
in the ecosystem. Yes. Okay, so while we are all, at the level of understanding that supply chain financing is definitely useful, and we're also looking at how that can be made, as a strategic tool or a lever to make your supply chains more resilient. I want quick comments from Venki first, and then we will go to Yashpal and Narasimhan. From a supply chain finance lens, how can such investments be repositioned as enablers of working capital efficiency? I think this is also a question that would be a lot of them have it on their minds as well.
See, today, like I mentioned to you in the beginning of my, comment, see, today, a lot of investments are moving towards managing working capital, right? Some of them is providing liquidity to suppliers to ensure, what do you call resilience in the supply chain, so there's no kind of,
Yeah.
stoppage, etc.
Mm,
That is provided through various products today. I mean, you rightly polled in that thing, people need flexible solutions. What is also
yeah.
happening today in the market is traditionally banks have been lending against, a typical balance sheet lending, right? But today, new age fintechs, NBFCs, which are kind of quasi fintechs, etc., are all looking at solutions which are more based on cash flow lending. And this
Yeah.
is kind of changed the dynamics, because what today necessarily the SME may not be the best of the SME, but if there is a line of sight on what he's supplying to a large corporate or a mid corporate, he has various solutions today based on
Sure.
exactly that particular trade he's doing and based on history vintage. So that is kind of helping, but I'm not saying that is completely kind of catering to the entire set of SMEs. But today there are various solutions. At least we are moving down one level from tier one financing to actually getting to an SME who's currently not only getting financing by a bank or a NBFC, but getting funded by a fintech NBFC who's willing to look at cash flow based risk lending. So that is what is evolving and changing. I mean, there are so many fintechs in the country which are doing it currently, and I'm sure more and more innovative solutions will come, but backed with enough risk, coverage. So
Sure.
that is what is, I think, changing the game today at supply chain.
Sure. Yashpalji, quick input on that?
Yeah, sure. So, like just taking forward in the traditional financing system from the bank, the main supplier used to take a credit from the bank and then used to pass on in the form of advances to his suppliers and in that manner. So that used to pile up. But presently, what is happening, even what we are doing is that we are signing a master agreement with the supply chain finance enablers. They can be
Yeah.
multiple suppliers. And based on the orders that we are issuing, they are funding the ultimate tier one, tier two, tier three. So this is how the line is going on. So supply
Sure.
chain financing is very critical. Forget, I mean, one part is the quality of the supply, but other is how to make that quality works into how the product comes into the production. That is helping us the supply chain finance. So it's very, I would say, a very important thing, and it's helping. I would say it's more of a non-cash transaction to the main, I mean, the manufacturer of the products.
Yeah, got it.
It's just passing the down the line. Yeah.
Sure, sure. Narasimhan, quick input?
Sure, Seema. I think, yeah, like what both of them said, I think it's supply chain financing is super important. Let me talk about one particular example, which I'm sure Reshpal would agree, right? So in terms of, let's say, you've got a contract with a customer, right? So, and this customer expects cost productivity year on year from you, right? So I don't know. I mean, every year there is an expectation that you would drive down your cost by 4 or 5%, right? And that you would want to push on to your vendor. So how long is this elasticity going to last is $1 million question mark. But again, if you have to be doing it, you will have to think innovatively. And if you have to think innovatively, which means you will need additional investments, right? So how are you going to be funding those investments? I mean, are you going to be taking those loans or helping the vendors do it, or does the vendor build it at the cost of the product itself, right? So that's a crucial decision which will need to be taken, right? How we're going to be supporting them, and driving that requires immense amount of supply chain financing, like what Ishpal said, not maybe directly, but how we're going to be enabling that vendor ecosystem for that to deliver that cost productivity which you need, which the customer expects. So it's like a chain on how the entire thing works, right? So that's why it's super critical.
Right, right.
Yeah.
One very, very interesting question, given that we talked about the context of supply chain financing, procurement and finance teams working together. So are there something called as shared finance and procurement metrics? And if it is, and it's crucial, can you share an example of one such shared metric that you've implemented and how aligned both the teams are and the kind of impact that it has created? So Yashpal, we'll go with you first and then
Yeah,
Narasimhan.
yeah, sure. So I mean, there are various metrics in which is integrated, I would say, are shared between the procurement or the finance team, starting from the vendor creation till the time of the supplies, creating the vendor masters, creation of the supplier, onboarding the vendor, then
Yeah.
various major, I would say, the regulatory part is there in which the shared. So one of the things that we have done in our organization, we were having multiple vendor bases earlier, all
Sure.
with a different titles or with a different set of payment modes. So the first and foremost, the shared was that we created a uniform database of the entire vendors, along with the all the key details and how they are going to be funded, what is the quantum of the supplies they are giving to us in last 3 years, 4 years, and how critical those components are to us. So this entire pool of database was shared between us. Together, the teams prepared it, and now it's running very fine. In the
Sure.
same, we worked out which vendor is in requirement of supply chain finance assistance from our side, which vendors are competent enough to manage their own resources, and what can we help them down the line to further reduce the cost so that we can pass on those benefits to our customers.
Sure.
These are some of the, I would say, initiatives that we did.
Right. Narasimhan, very quickly.
Yeah, I mean, yes, Seema. So in terms of what we've done, yeah, I mean, as I said, I mean, today the systems are integrated. So today you are a part of the procurement. So I think fundamentally the one key metric that we were able to drive, which was in alignment with procurement, though it is not necessarily aligned to them as per the organization requirement, is the cash flow, right? So what we've done is for every project that we do, right, we've ensured that there will be a positive cash flow by project. It's a very difficult thing to implement, right? But we've done it by project, right? So we've got multiple clients who we have with different payment terms. So what we've done is we've integrated the supplier database. So we've got it in one place now. What we're trying to do is look, if my cash flow needed to be positive, what do I need to do back end to ensure that, the credit terms back to back with our vendor are there? Though they have defined, is there any scope for us to go and see how we can negotiate it better? Or, like players like Venki who come and step in there, right? And sort of, can they support the vendor to ensure that, our cash flows can actually be stretched so that we're cash flow positive. I think that's the most important metric that we've done, and we've been pretty successful in that.
Sure. Very
Yeah.
interesting. Venki, your input here?
Yeah, I think I completely agree with both Yashpal and Narasimhan. What I'm actually wanting to see is actually while large corporates are able to do this, I think the mid-tier has to still do a catch-up, because that's where they find a lot of challenges in terms of capital. I mean, this needs a little bit of, like Narasimhan mentioned, a lot of project planning, etc. And that's where I think we need to find a solution for them as well, so they get better competitive in the market.
Right.
That's the missing part, I feel, more so in the lower down the order as we go.
Right. So, another aspect that we want to quickly explore with our audience here is the digitization of the supply chain finance infrastructure. So we want to really query the audience on where they are and what is the level of digitization. Okay, we'll go to poll question 5. Yeah. In the meanwhile, what we've also done is we've shared with our audience a compendium of supply chain finance case studies. So please do click through the link and read it at your leisure, please, because it's a very, very interesting set of case studies that have been put together. Yashpalji, I understand you have a hard stop at 3:40. So thank you so much for contributing. And I think we have Venki and Narasimhan who will sort of walk us through the conversation.
Thank you,
Thank you so
Seema.
much.
Thanks, Narasimha and Venkatesh. Thank you very much.
Thank you.
Thank you very much. And my apologies for leaving earlier due to some commitments. Thank you.
So we have about 43% that say it's semi-automated with partial manual processes. About 26% says mostly manual with limited integration, and 22% say fully digitized with end-to-end automation. And of course, a smaller percentage says digitization is planned but not yet implemented. Venki, I want your quick input on this. Is this what you're seeing in your ecosystem with clients?
Yes, I mean, to give you a quick sense, I mean, having been a banker for almost 20 years,
Yeah.
started off actually in a manual process where we used to actually move the invoices physically and to get discounting for corporates or their ecosystem.
Sure.
We have actually moved to a completely automated kind of scenario today. I mean, there is still process improvements happening, but like I mentioned, large corporates are able to easily adapt. While doing so, there is an opportunity. I mean, there's so many firms which help mid-tier firms also to kind of help do this automation with financial institutions on a SaaS-based model as well. So today, it's heartening to know that many fintech firms are doing a lot of work and heavy lifting both on the corporate end and the FI and the financial institutions end to ensure that the supply chain specifically is completely automated and availability of finances just at the tip of the button. So I'm seeing that really happening across.
Sure. Narasimhan, quick input.
Yeah, I pretty much agree with what Venki said. Right? I think the automation is catching up pretty fast and soon. And the best part is it is able to talk to your ERPs, right? And which was in isolation earlier. I think the fundamental requirement is that it talks to that. I think that we made quite a lot of progress. And as we evolve, I'm pretty sure with AI as well coming up, I think the process will get seamlessly integrated.
Right. Interesting. So that actually, brings me to my next question, which is around trends around embedded finance and AI. So what do you think would be the next frontier for supply chain finance platforms? So how will they move beyond financing to become even more predictive and proactive to risk management? So Venki, your quick input, and then
like I mentioned earlier, Seema, is that today traditional supply chain has been in vogue for a long time. I mean, started with automotive and then went on to various industries. But now with the deep tier coming in and yet to catch up, but I think then corporates can get a little more, clarity on the, like you said, predictive nature of the supply chain or how it is moving, etc. And that's going to bring a big change, the deep tier financing. And India is slowly adopting that now. We are seeing across institutions doing a lot of pilots to try and ensure and make it better and better. The second thing was obviously I talked to you about the private credit, which is the trade risk securitization, which is now actually started off. I mean, it's a big thing in the West, and now it's in India. Was also kind of started off where private credit is getting involved in financing some of those transactions which banks or NBFCs would not do for whatever reason.
Yeah.
According to this one, but I think these two things will be a game changer. And thirdly, embedded finance today is anyway become a part and parcel of every marketplace. I mean, so
Right.
it's already there, and it's only improving day by day as to how better and how quicker we can get, especially on the assessment, etc., to ensure the financing is just at the tip of the button.
Sure, sure. So, Narasimhan, does this become part of your entire finance transformation process where you're trying to see, greater integration for supply chain and supply chain finance to your overall finance strategy? And, how is automation playing a very, very important role here?
Yes, I mean, it's super critical, right? As I said, I mean, I'm not an SME. I think CK would be a SME here. Venki would know much better than me, right, in terms of what's going to happen in terms of the emerging trends. Yeah, but the faster the better, right? So systems are talking to each other. And if you think AI will play, as I was saying, will play a big role, in what form, we actually don't know. And yeah, obviously, I mean, if it's going to be delivering productivity to the organization, we'll definitely want to integrate it.
Sure, absolutely. I'd also encourage our audience to type in their questions, etc., so that both Venki and Narasimhan can take it forward. So, quickly, your inputs on a very interesting aspect. Through the conversation, we've talked about both functions working collaboratively to be able to drive better synergies and leverage better price points, etc. We've also talked, we also know internally the kind of challenges that comes with this collaboration, right? So, Narasimhan, just wanted you to talk to us a little bit about, what are some of the key areas that you would focus on as a CFO or a finance leader to explore integrating finance and procurement for supply chain resilience? So you've done that fairly well within your organization. So for a lot of them who are in the journey, what is it that you will offer as a piece of advice?
Right. So, yeah, I mean, we've done it before, Seema. So, as you said, I mean, I think it depends on the maturity of the organization. Some organizations, I think the systems are completely integrated, right? And some it's an evolving stage, and some are still at, at a semi-evolved state. I
Sure.
would say. I think fundamentally, and what data are you going to be integrated is super critical. Like, if you're going to be talking about masters, vendors, masters, I mean, that's the fulcrum of the organization. You better integrate it, right? So masters get integrated. Your cash flow in terms of what is the payment terms of the vendor is supposed to be integrated, and it does, right? That's how you're going to be integrating, right? So, and what you would want to integrate, what is a must have and what is a good to have. I think that's where you take a call. Must have is what I just said. What is a good to have? Greater visibility in terms of the matrices and the way the procurement is happening in terms of the cost, in terms of what are the sort of quotations that have come in, who are the vendors, how do you want to participate, does finance actually need to be there, or you define a threshold and you finance guy becomes a part of the committee of procurement. So those are those are calls which the respective organizations would take, I'm sure, right? So it depends on what level of integration you would want to do. But I think fundamentally, I think you will need to have, for example, the tax masters, the vendor masters, the payment terms. Okay, once you negotiate the rate contract prices, I think these need to be a part of your common ERPs so that they're part of your common matrices. The rest, as I said, is a good to have. We could take it as stage two, and then we can see how to sort of put it up in the organization and integrate that as well.
Right. So, Nasiban, what has been your experience? I mean, in India, I know that the procurement sort of reports into the Office of Finance. Globally, is that the trend, or is it a separate function by itself, which sort of reports into the business?
So it depends. Not every organization. Maybe there are a few where finance they report into finance, but there are some who report into supply chain.
Okay.
There could be a global procurement team. Like for our organization, there's a global procurement team, right? So they report to nobody within the country. They all report outside.
Okay.
Yeah, but ultimately they're still responsible for the productivity. So there is a global productivity, and that's how productivity is pushed. So it depends on the respective hierarchy of the organization. There's no one standard answer that fits all. It could be the prerogative of the organization.
Right, right. Venki, what is it that you're seeing in your client ecosystem, in terms of finance and procurement sort of collaborating? And as a seasoned business leader, what would be your 2 cents into this one?
Okay. What I'm actually seeing today is corporates more and more are realizing that, you need to ensure that the last mile is covered.
Mm.
So they are, I mean, while today, if you go to a large corporate, obviously you will see different forms of financing in supply chain itself. Maybe the typical traditional ones, which are normal, where typically 20-30% of your top suppliers are funded, and there is another 30% where you have an NBFC funding it, and there's the last tier, which is actually typically which is funded by a fintech, etc. So what corporates are today doing is trying to capture the entire essence of it and ensuring that they're kind of ring fencing and the entire piece, because you never know when the next code will hit, and we want to
Right.
we want to ensure that the supply chain is resilient and ensure that you're well covered and you're covering the base as well. And that's what
Right.
I'm really seeing, and that's one of the reasons, if you see supply chain, not just I mean, it's spread across industries today. I mean, you take, I mean, the largest in terms, I would say, would be in terms of value, maybe definitely automobile, but in terms of volume, if you really say, it is the FMCG and the oil marketing companies. Today, I mean, the amount of supply chain financing, form of financing which happens in the oil marketing companies is tremendous. I mean,
Right.
and it's like it's going crazy, because today obviously the amount of petrol bunks and the bunks across the country, which is building up, and across these five large giants, I think it's really the thing to watch.
Right. And also, I think, we've seen far greater integration over the last couple of years. I mean, thanks to disasters like disruptions like the pandemic and obviously the geopolitical disruptions that we are seeing today. And I think we will continue to see that in the next couple of years. So I think organizations are looking at alternates, strengthening their supply chain, looking at partners who are valuable. Like Yashpalji said, it's not about cost or the price point at which we get it, but it's more about who is the kind of partner who will stay with us for a longer period, deliver quality products, and also, the value that he or she or his organization brings to the fore. So I think that's very, very important. And we are seeing far greater integration than we saw a couple of years ago. And I think even from a technology point of view, given that finance function is undergoing tremendous transformation from a technology point of view, embedding AI, machine learning, and several other things into the hopper. I don't think the time is really far where we will see greater integration between these two functions. We have a couple of questions here, and I'll read them out, and maybe you can take them. The first one says that even though many advancements are taking place in telecom sectors, still there are a few hiccups in tier 3 towns. How do you address them from a data integration standpoint? Do any of you want to take it, or is it really...
See, one way I could give one use case example.
Yeah.
Sorry, Narasimhan, you want to say, or I can go?
Yeah, you're the SME here.
Okay. So what I'm really seeing is, like, I gave you the example of this oil marketing company. Today, you see a petrol bunk in the smallest of the towns, right? So there are models which has been created now where you are actually able to fund that particular bunk in a matter of 15 minutes, and that's happening across the country today. I mean, so data integration, while it is not so difficult, because today you have internet in every nook and corner of the country, right? It's about the intent. I mean, if the intent is there to do it, I think you can do it. And I think as far as supply chain is concerned, that is never a challenge. I mean, you can even do a kind of funding into a Timbuktu, a customer in Timbuktu as well. So that is never a challenge.
Right. I think our next question is, we still see OEM asking JIT supply chain plus maintain safety inventory, which increases the financing risk and higher cost. I'm a little unsure. I think he wanted to complete it, but nevertheless, I hope you've got the gist of what he's hinting at.
Nasimun would be the best judge.
No, I mean, completely agree. I mean, this is true, which I just said some time back, right? So, I mean, obviously every OEM is asking for JIT, right? And obviously you being the most important person in the middle between the vendor and the customer, obviously it's also responsibility. So which means, yes, you will have to take costs, you will have to take calls to ensure that your inventory is optimal, while you ensure that you support your vendor ecosystem through financing to ensure that, you manage the jet inventory, right? What comes to you goes back down the supply chain, right? So
Sure.
you take care of both the upstream and the downstream and balance it both. That's super critical. Yeah.
Right. Venki, another pertinent question to this whole conversation is that globally, what are the trends that you're seeing from a supply chain financing point of view? Because some of the evolved economies also do have a sizable mid-size enterprises, right? So what do you see are some of the trends globally?
What I'm really seeing, actually, I would like to invert the question, is because
Hmm.
what I'm seeing in India
Hmm.
is far more, higher in terms of what we're offering than globally. Because globally, typically, it has been a very traditional kind of approach. But if you
Sure.
see countries like Indonesia, Philippines, India, and all this kind of one, I think supply chain is really evolved far
Hmm.
ahead of lot of the counterparts. So
Right.
I would still believe the India is a better use case in terms of supply chain for anybody to kind of dig in and see as to how resilient we are kind of trying to become.
Right. No, so that's very encouraging because, some of the developing economies like us in Indonesia and Philippines, etc., are sort of paving the way for smarter opportunities for leverage in this particular space, which is really, really encouraging. Nasiman, globally, what is it that you're seeing? I mean, you're part of a global entity, so do you see some of the innovations that we do in the Indian market also reflected there?
Yeah, I mean, obviously, yes, but yeah, obviously, India is a super creative country, right? So
Hmm.
we come out with solutions every time, right? We are more resilient to change than I
Hmm.
would say, I mean, the rest of the guys. I mean, we react pretty fast. Obviously, we put in a Jugaadu solution and then we sort of put in a process around it, right? So
Right.
that's how we define it. Yeah,
Right.
but yeah, I mean, obviously, being a multinational, obviously, you will have certain processes that you will need to adopt. Not everything is flexible within the country. But I think the origin of the ideas, quite a lot of them come in from here, and they're globally invented as well. I mean, implemented as well.
Right.
So yeah, I mean, so our CEO had to say something. He said, if you could sell a product in India, right,
You could sell
you
it anywhere.
could sell it anywhere globally because the Indian customer always wants the best product at the lowest cost.
Hmm. Hmm.
And that's true. I mean, so all your innovation happens here, and if you could do it here, you could do it anywhere else globally.
Right. No, which is very heartening to know because while you're part of a global entity, right, you have the flexibility to innovate, and some of those innovations are taken to the global HQ, as best practices that can be implemented in other parts of the world, which is very, very heartening to know. So I think overall we've had a great conversation. I just wanted to check with both of you if you want to, spend another 30 seconds to quickly summarize and what would be your takeaways from this interaction.
I mean, let me go first. Lots of takeaways from what Venki said. I think I'll connect with him offline to understand what his solutions are in detail. I think that's the first takeaway. Yeah, quite a lot of it. Yeah, but yeah, I mean, as I said, this is a very evolving space.
Sure.
There has been lots of progress that's happened, but there is immense scope for improvement,
Scope for
right? Like
improvement.
what we were talking about, if you've got to be having AI inside of supply chain finance, that in terms of what the scope is and how it's going to play an important role, it will be pretty interesting to learn. And I
Right.
think we want to be the first adapters there as well. Yeah.
Sure, sure. Venki?
I mean, on lighter side, it's been very heartening to be part of a very esteemed panel, Narasimhan and Yashpal, of course. Second takeaway, obviously, is that there's a lot to do. And I mean, I think adaptability should be very quick. That's where I think we are also working towards, because one is financing is need of the hour. If not even today, even tomorrow, day after, it's going to be there. So how
Right.
can efficient you can be is what we are trying to work on as a company as well.
Sure. No, very interesting. Thank you all so much. I think we are dot on time. Thank you all so much for joining this conversation, for giving us your inputs. I think we had a fairly engaging and interactive session with obviously powerhouses like Narsimhan and Yashpalji contributing, and Venki as a subject matter expert. Your inputs were very, very valuable. Thank you so much for joining in, and a big thank you to our audience as well for taking time out. And yeah, I did see one hand go up. Well, let's quickly check what Jayant has to ask. Jayant, any question that you wanted to put forward? Jen? Well, I think, okay. Says mute. Okay, great.
Right.
Also, I know that we covered a few aspects here, but if there are questions, comments, etc., feel free to write in, and I'd be happy to channelize it to Venkatesh and Narasimhan, who will be happy to respond to your queries, comments, etc. So thank you all very much.
Thank you.
Yeah,
Thank
for
you.
joining
Thank you a
us.
lot, Seema.
Thanks.
Bye.
Thanks.
Thank you.
Thank you.